And Thomson Reuters, which is a very, very services rich and services integrated business, is very different from that. So you've got a product with SaaS-based model, and you've got the services rich model, and how are those two going to combine? That might actually be more important than the price of the set.
Growing a business requires a holistic approach that extends beyond sales and marketing. This approach needs alignment among people, processes, and technologies. So if you're a business owner, operations, or finance leader looking to learn growth strategies from your peers and competitors, you're tuned into the right podcast. Welcome to the WBS Podcast, where scalable growth using business systems is our #1 priority. Now, here is your host, Sam Gupta.
Hello, everyone. Welcome to today's show. And this is the series Analysts Gone Wild. As part of this series, we bring the spiciest stories from the week as well as from the month. By the way, this is our second episode. The last episode was really hit. So we have decided to increase the frequency. Now, we are going to do this every Thursday. And as part of this series, we bring many different experts. And they are tracking these industries on a daily basis. So every expert is going to have their own focus areas, and they are going to comment on these stories from their perspective. So if you are in the audience, we always like to create this whole three-way conversation. So if you have any sort of background about these companies, any experiences, if you don't agree with our analysis, we are looking to hear that, and that will be displaying as we progress with this episode as well as discussing. So be part of the conversation. Welcome. A little bit about myself, Sam Gupta, principal at Elevate IQ. Elevate IQ is the analyst and advisory firm. I've been covering the enterprise software space for roughly now, 20 years. So on that note, clockwise, anti-clockwise, Chad, I'm going to start with you.
Hi, everyone. Yeah, my name is Chad Houston. I started my career at IDC, was an analyst there for 10 years, always covering the IT services market. So you think about the consulting managed services space. After that, I joined Capgemini. I was in corporate strategy there for 3 years and recently started my own company, Better Way Research, with providing a benchmark and forecasted rate by looking at the top 220 IT services vendors in constant currency to understand how the revenue is trending by 3 lenses, right? By market, by vertical, and by region. I'm happy to be here. Thanks so much.
Yeah, and look at him. He has his data down always, right? So that's how the analysts are. Love it, Chad. Thank you so much for being. Robert, do you want to go next?
Sure. Robert Kramer with more insights and strategy. My background covers mostly enterprise data, enterprise resource planning, and supply chain, and also data protection. So most of my time has been spent in those areas over the last 25 years. Looking forward to weigh in as you need me. Sam, and pleasure to be on this call today. Thank you.
Amazing. Thank you so much for being here, Robert. Always fun collaborating with you. Donald, do you want to go next?
Yeah, sure. I'm Donald Farmer. I am the principal of TreeHive Strategy, which is specializing in strategic advice to software vendors and enterprises and investors, specialized in data and analytics strategy, increasingly, of course, now in AI strategy, long-term industry veteran. I've been doing this for more years than I care to say online, and former Microsoftie, was with Click Technologies for years as well, developing their second-generation technologies.
Okay, amazing. Thank you so much for being here, Donald. Hyun.
Yeah, hi, I'm Hyun Park, Chief Research Officer at Amalgam Insights. I look at AI and IT management solutions. As Donald knows very well, a lot of the things that we've looked at in analytics and data management have transformed into AI enhancement and support. So I do a lot of work helping companies with that. It's something that I've looked at for the past 20-some years. But I would say that I look at it mostly from a focus of following the money, figuring out how budgeting, billing, and the actual vendor relationships take place. So a little bit different from, say, what Robert and Donald do, just that they have fantastic technical chops as well. So I'm looking forward to the conversation.
Okay, amazing. Thank you so much for being here, Hyun. And overall, I guess for the audience, The way this is going to work is it's going to be a very informal, conversation. So I am going to start right with the stories. Just 1 second, let me be stories. This is probably the best view for us, and we are going to jump right into the stories. So guys, in the audience, for your knowledge, we have 4 experts. So Chad is going to cover more from the IT services perspective. Anyway, when we need his insights, we are going to ask him. Robert is going to be the ERP and data. Donald is going to be data and AI, and Kian is going to be you are also AI as well. So I'm actually going to start with the first story. I'll give you guys some background, and then you guys can provide your experiences, what you have seen on this particular story. So, Chad, you are probably going to have more background on this because obviously you track this, right? So, Thomson Reuters, they are, in my mind, the way I like to see them, from the business model perspective, data, information, a lot of media, but they also have the accounting play, very similar business model as Wolters Kluwer, LexisNexis. These are some of the common names which are going to be similar. But then they also have a little comparable with your Bloomberg, S&P Global, etc. Overall from the business model perspective. So this one is a very interesting acquisition because they have a little bit of software play as well. And this particular acquisition is going to be the software. And in my mind, the accounting industry is very different. In general, the kind of processes they are going to have, they don't necessarily follow the traditional enterprise software value chain, I guess, if I can put that or use that. So in this particular case, they are calling some of the buzzwords such as last mile, which is a very freight supply chain centric term, but they are calling it. So it's very interesting. For the most part, I like this acquisition. Now I'm opening up the floor. Who would like to go first? Robert?
Well, I think it's like you said, you like the acquisition. It gives Thomson, more automation capabilities, right? And more product capabilities. And it gives, SafeSend more resources from a global perspective. It also gives the customers a lot more as well. I think there's going to be some integration issues, some challenges on the two companies coming together from that perspective. But I think all in all, it's a pretty substantial, acquisition, and it's going to be probably long-term very successful.
Yeah, I just add to that this, tax space is interesting because when you think about accountancy, it's easy to think that accounting is about data, but really accounting is about workflows as you're looking at tax, close, consolidation. And I think this is an important step for Thomson Reuters in taking a hold of that. But of course, you're working against the likes of LexisNexis. If you're looking at something like financial close, you've got companies like Flowcast, Blackline. You're trying to figure out how to actually manage these complex data, data sources. In that some of them are unstructured or semi-structured. You have a lot of documents that previously were handled by hard-coded logic that are increasingly going towards things like generative AI. And now Thomson Reuters is getting a hold of more of this tax information and probably being able to bring it from semi-structured formats to something a little bit more organized that they might be able to use for more interesting holistic accounting visibility if they end up aggregating this data. So I'm interested in seeing how this ends up fitting into their larger data strategy at the end of the day.
That's a really good point.
I think one of the things we need to question about this acquisition is to what extent SafeSend is just going to disappear into Thomson Reuters, and to what extent its existing business, which is very strong, will continue as an existing business. The Thomson Reuters pricing model, the Thomson Reuters business model is very, very different from SafeSend's business model. And I don't think SafeSend customers will be happy if they just disappear into Thomson Reuters. So we got to hope that, Thomson Reuters learn, they take the technologies, they learn from the automation technologies that SafeSend has, but they don't want to kill the golden goose either and spoil the SafeSend market. And I think that's really important because all the indications are that tax filing, tax preparation is going to change fairly radically over the next few years. It's already changing radically in other countries as a result of AI. So in a sense, SafeSend is a very important acquisition. They better treat it as an independent business model, which has its own value to them.
Yeah.
Okay.
Yeah, and I would just add, I think this is just a total example of the verticalization of technology. Like you use the term last mile, right? And I think this is a perfect example where you look at every single part of technology, it has to have this vertical lens. And this is just kind of another example of somebody having a success by finding that very specific part of a very niche market, right? Like tax preparation, and saying we can build a platform and having success on it. Just from a services perspective too, I would add that it says that it's used by 70% of the top 100 accounting firms in the US. Now, from an IT services perspective, I find that interesting because if you think about the largest accounting firms, right, we think about the big four, but even beyond that, they all have very large consulting and integration business as well. And so as Thomson Reuters, right, they add this, that gives them a whole new market and a whole new channel to start targeting, right, those IT services capabilities, and also could create some synergy because Thomson Reuters, right, they're almost kind of a holding company with a lot of different types of businesses. They can break into that IT services channel by using those accounting firms. Huge opportunity for them to leverage that as just an additional go-to-market. So I think that, for them, it's always about getting to the end buyer, using that, last mile. And so I think that could be a great opportunity.
Yeah, just to weigh in real quick, there was a question about what's going to happen to SafeSend customers. I think they're going to have, it just depends on if it's mutually exclusive, but if they're blend the two companies, it will give them more access to a wider range of solutions. So it just depends upon what we all think our opinion is, but I do think that it's going to be a scenario where it's going to give both companies a little bit more for their customers if it's integrated correctly.
Absolutely.
And if the price is right.
Yes. Now, let me quick question on that. Do you feel that customers buy on price or innovation? What do you buy?
They buy on a pricing model, which is somewhat different from price. Okay. There's a pricing model, and I think people are very comfortable with the SafeSend pricing model. And Thomson Reuters, which is a very, very services-rich and services-integrated business, is very different from that. So you've got a product with SaaS-based model, and you've got the services-rich model, and how are those two going to combine? That might actually be more important than the price itself. Are they happy with the model? But we just need to see. It's difficult to predict this.
Yeah, guys. So I'll provide some more, context from my perspective. There are very interesting comments. Some of the comments related to, Flowcast, as well as one more company which I don't remember, Heian, that you had mentioned. Heian is going to be more of the CPM vendor. Overall, from the category perspective, they are very product-centric company. This is very service, as you guys have all sort of agreed, that this is more of the media information organization. They have big presence in the tax accounting space because they rely substantially on these companies for a lot of different information, I guess, and that's why the whole tax processing play is very interesting. And in this particular case, this is just a division in Canada, so they have this business. It's a completely different business unit, and they have done one more acquisition related to this. So they are really trying to penetrate into that market right now. I don't know if you guys are going to have any follow-up comments on that. Okay, so we have some comments from the audience, so we'll cover those and then we'll move to the next story. So hello, Sashi. Thanks for joining the show. We have one more. We have Alisa. Alisa, welcome. Thank you so much for joining. Okay. We have one more comment from Shashi. He's saying, Thomson Reuters, is this more strategic move to enhancing their existing services than brand expansion into the financial and accounting software market? So what happens to SafeSend customers? And I don't think that question has been answered so far. So I don't think this SafeSend acquisition is going to be merged with the overarching organization. It's still going to be plugged into that division. That's at least my take on the story. It's going to be part of the same acquisition that they have done in the past. That is going to be, in my mind, at least entirely different from their main business unit, which is your news media, the kind of services that they are doing. But then they also have a little bit of product and IP play for the accounting firms. Comments, follow-ups?
Yeah, when I think of this piece of the puzzle, I think of everything that Thomson Reuters is doing across legal and other document-based workflows at the end of the day. And I found it really interesting what the quick point that Donald made around the pricing model and then the services associated with this. It made me think about some of the, say, IBM acquisitions that have happened in the past, where a software solution comes in and then probably going into Chad's world of adding the services, 10xing the contract at the end of the day by figuring out where else you can add things along the way. And for Thomson Reuters, I would think that something like SafeSend at the end of the day is an entry point, a wedge to be able to get additional business rather than as a standalone. So I worry about what Donald said before, that this may not be a fantastic outcome overall for customers because there's a bigger picture to Thomson Reuters' multi-billion dollar conglomerate business that they have.
Yeah, that's exactly my concern.
So let me ask you guys this question. They have paid $600 million for this business. In your opinion, that is okay, higher, lower?
It was all cash, wasn't it?
I don't think we have that data unless somebody
I
has.
thought it was a cash. I thought it was an all cash acquisition, in which case that's actually a good number.
All right, you guys
Maybe
agree?
I'm wrong.
No, you are not.
I read my notes.
If you guys don't have any other comments, then I'll move to the next one. Okay, so I'll give you some background on this one. So this is SPS Commerce, and I don't know how familiar you are with SPS Commerce. SPS Commerce, the way they are positioned in the market, they are primarily the EDI vendor, and I don't know how much experience you guys have in the EDI space. This is going to be B2B communication, B2B interaction. A lot of manufacturers are going to use distributors when they are communicating with their value chain. And in this particular case, they have acquired Carbon6. And in this space, you are going to have a lot of play in communicating with Amazon sellers, because Amazon is going to be one of the channels that most of these businesses are going to target. So obviously, from the technology standpoint, from the integration standpoint, there are going to be a lot of different comparables. EDI is just one play. For example, let's say if you look at P2P is one of the category which is going to be used in this space. So a lot of different vendors are going to be in that as well. For Amazon, Amazon is going to have their own sort of proprietary plugin. Shopify is going to claim that they have these capabilities as well. So guys, what do you think of this acquisition? Anybody has any comments?
Yeah, I'll start it off. I mean, I thought it was really interesting. I thought if you looked at SPS Commerce's website, they talked about their vision is to be the world's best retail network, right? Yeah. And I think in this world, right, where there's all these different parts that are moving, right? You have the manufacturers, you have the retail providers. There's so many transactions that are going on. It's such a complicated piece. Being able to own that, I mean, there's a huge opportunity there. I thought it was really interesting as well. If you looked at the business outcomes that were talked about in the press release, right? They were specifically targeting Amazon sellers by helping to optimize invoice deduction disputes, reduce resolution time, and help prevent invalid deductions from occurring in the first place. So I thought it was great how they were really focused on here's the business outcomes that this actually brings to Amazon sellers. And they talked about how they have the existing relationship with Walmart, right? So they're just continuing to move through that and sign new contracts with all the retail providers. One other thing I thought was just really interesting is if you looked at their announcement about it, right? They talked about some of their channel partners, right? They're currently working with Cognizant, Accenture, HCL Tech, Capgemini, and this is a great channel for them to be able to go to because all of those IT services vendors, again, are working with the large retail providers. And so if they can be that single platform, that single source of the truth, huge opportunity there. I would just add one more thing, which is I looked at their latest earnings release. They said that they have a $5 billion TAM. I think that's a huge underestimate because currently they're already at $500 million in annual revenue. So that would be that they're 10% of the market share, right? If you think about what this opportunity is, I think it's probably more like 50 billion in terms of a total TAM. So I think they're really underestimating their total opportunity if they truly believe in that vision that they can be that world's retail.
Interesting points. Anybody else?
Well, I'm also always amused by the workhorse of EDI and how it has managed our business billing and invoicing for such a long time. Like the longtime heavyweight champion, it's one of these things you just can't get rid of, like Java, like Fortran. But that aside, this relationship also reminds me a little bit of kind of going back old school, the telecom billing world, the OSS BSS world, where we had all these billing formats and companies that ended up supporting the large AT&Ts and Vodafones of the world. Now we've got the Amazons and Walmarts of the world on the retail side, but it's a similar type of complexity that we're dealing with here. And I think there's going to be a lot of intelligence. Again, I always think back to the data. What are you able to get as a result, and what might you be able to pour back into AI. And when you think about the transactional knowledge that you're gaining here, I find that fascinating, especially since we seem to be going into a more centralized form of economy. More the Amazons and the Walmarts of the world are playing a bigger and bigger part of our supply chain over time, whether we like it or not.
Yeah, great points. Robert, you are going to have anything? Sorry, Donald, go, please.
I'll go after
No,
him.
I feel I'm not a natural skeptic, genuinely, but I'm very skeptical of this one. Almost everything Chad said, I agreed with, but I thought of it as a weakness rather than a strength. Apart from the TAM, which is, this is a lot of money for a niche company. They paid $200 million for a niche recovery. It does invoice recovery on Amazon. That's a very, very small thing it does. I know it's a big market, but still, it's a very specific thing. And they just acquired a similar business for Walmart. Again, a very, very niche thing. It's quite vulnerable because if Amazon change their terms of service, or if Amazon decide to implement their own invoice recovery service, and why wouldn't they? Especially if it's a good business, why wouldn't Amazon do it? Then this business is actually quite threatened. And I think relying on Amazon's marketplace dynamics, yeah, I see that it's a huge market, but their value could disappear overnight, given a simple change in terms of service from Amazon or Amazon introducing a new service. I understand why it's valuable or why it's an interesting acquisition right now, but $210 million for it seems an enormous amount of money for such a niche, product. So I'm skeptical about this, just because they've already done this with Walmart. They're doing it again, and I think it's a very market sensitive acquisition that they've overpaid for.
Robert, you have something?
Just briefly. So I think that it was mentioned that everybody's moving towards unified platforms, and I think this is a case in point where SPS is enhancing their supply chain, and that you're going to see a lot of things in this year where companies are modernizing more and enhancing their supply chain. Supply chain gives them more capabilities where they're able to put everything into one platform, which was mentioned, but this also gives more resources to SPS. Obviously, they see growth that they pay for it. There's an enormous amount that they probably can gain from this within their supply chain, that they feel that the recovery is worth it. But for the customers, it gives them more of an access to an integrated suite, and it gives more visibility. I think that's what SPS is looking for on an area that they felt is a loser for them. So now that they can turn it into something a little more special, and I think it's the business impact. We'll see how it goes over the year. But this is a big market, I believe.
Yeah. And I think, Donald, you brought up a great point, right, with talking about Amazon, because the way that Amazon works, right, is they're the big bully on the block, right? They can kind of control the terms of service, right? So you have to kind of wonder, why are they not kind of offering this themselves and instead are kind of, putting this off to the channel to have people do these types of invoice resolutions. And you're totally right that if they were to change the terms of service or the way that is, you have to completely rewrite the code, completely redo the business model. So that definitely is a huge risk when you start thinking about, these huge, large players and the control that they have over it. It's a huge risk for this acquisition as well. I thought that was a great point.
Yeah. Mm-hmm. And Hugh and I have seen this many times in the data world. We have seen Amazon encourage vendors in the data space and the AWS data services, and then move into that space. Redshift, they moved right into the territory of appliance vendors that they had partnered with, and then just took over that business. Said, thank you very much for preparing the ground for us. Now we'll build our own service. And I think we're very exposed to that. Yeah, you know what I mean, June.
Yes, Amazon Web Services has its own cost manager product that they use to help Amazon cloud customers to actually cut their own costs, because Amazon at the end of the day wants retention. They want more and more customers, and they've always played the long game in terms of going there. So I think it's important for SPS to start pushing. If they want to make this Carbon6 acquisition successful, they have to make it part of a multi-platform service. So you go in and say, I can support all of my retail invoice responsibilities and interactions and discounting. So I can do Amazon and Walmart and whatever else through this integrated platform, which is a hard task to do, because when I look at this in the IT management world, there are similar types of companies that will help you with, say, AT&T and Verizon and T-Mobile, or in the cloud space, Amazon and Microsoft and Google and Oracle, or in the SaaS space, helping you with your Salesforce and your Microsoft and your Adobe. But if you are a single vendor optimization solution, it is kind of a dead end without being able to have that next level of optimization or management or insight.
Well, it is a dead end, except that as soon as you become multi-platform, that's exactly the point that Amazon want to move in and take over your business, because they don't want you to be multi-platform. They want the retention on Amazon. They don't want a service that enables you to work on Walmart and Amazon at the same time. So I think this is very risky. I really do.
So
and
guys,
they've overpaid for it.
Yeah, so I'll give some more context here. And I don't know how much you guys have tracked Amazon. Amazon did acquire a company previously very similar to this, but that is going to be not EDI, I guess. It was more of the shipping add-on. And the way shipping add-ons work, they sit on top of the ERP. And what they do is, so for example, in this particular case, this tool in the market, they are going to say that, you know what, I'm free, meaning you are not going to pay anything for the platform, but I'm actually going to charge Amazon. So Amazon ended up acquiring that company. So technically, they have access to that. Donald, to your point, whether they are going to acquire something similar or are they going to develop this capability. So they are able to provide this. But in addition to that, they work with pretty much everybody, because platform play is where the real strength is of these companies. You are right when you compare this with Amazon versus Walmart. Obviously, Amazon and Walmart, they are kind of going to be rivals, I guess, overall from the marketplace play perspective. But for the others, I guess they are going to make the ecosystem slightly open. That's what makes them slightly strong. Any follow-ups? Okay.
Well,
Go ahead.
I mean, I would just ask, for the data experts, right? Is there a Gen AI opportunity, right? Because if you think about, I always think about it from an economics and a market perspective. If you have all this data about how the market is working, does there now give you an opportunity to leverage that and even start to sell insights and data and predictive analytics around you having this whole view? Because they talk about, right, their vision is to be that single platform for the retail industry. So if they get there, is that an offer, an opportunity for them? I would just be curious what sort of data an AI expert.
It is an opportunity if they can provide better analytics than Amazon already do. And I think the way in which they would do that is they would need to provide an entire workflow around that so that you did it, in a sense, their way. So rather than just providing analytics that people would serve themselves to, I think they need to have a sort of prescriptive methodology that people would sign up to, and then they would, we do it the SPS way. If they can do that, then I think that is one way of taking advantage of this.
Yeah, and I would think that from an invoice management perspective, like, invoicing by itself is limited unless you also have visibility to contracts, to logistics, possibly to geopolitical risk if you're dealing with international trade or drop shipping type issues or what have you. I've heard we have a new president with a new trade policy here in the United States. All sorts of things that can potentially affect your Amazon business. So I think it's a piece of the puzzle, but I'm not sure that you're going to be able to get to everything just through invoice optimization.
Okay, very interesting points, guys. So I don't know if you guys are going to have any follow-ups. If not, we have a comment related to this story. So Anders is saying that with its vast transactions history, do you think Carbon6 would sell consulting data on a SKU or category level, such as expect 12% returns on this item, so increase safety stock? And that's a very interesting question. I'll provide some background here, guys, and then if you guys are going to have any comments, you can provide that as well. So Anders, I guess SPS is not necessarily a data company. I would position them as more of the connectivity company. Document exchange company is probably the best way to describe them. They are comparable, at least in the enterprise space, is probably going to be open text. They are in that game as well. So here they don't necessarily sell data. I don't know if they are going to get into that business. There is a possibility that, and again, they have been trying to position them as more of their competitors, I guess. TrueCommerce is going to be their competitor. So they have been trying to position them as more of the control tower, a little bit in the supply chain space, even though EDI is going to be in supply chain space as well. So I don't know if they are going to get into that business, but this is a very interesting.
It is, and a lot of this depends on the T's and C's of the Carbon6 licenses. I actually don't know whether they can share this data. My memory of this is hazy, but as I remember, they're actually one of their selling points, or at least one of their strong points, has been the privacy of the data, because it is sensitive data. It's invoice return data, so it's sensitive data. Whether they could aggregate this and anonymize it in a way that they could then monetize it, I'm not entirely sure.
Anybody else?
I would just say from a consulting perspective, right? I mean, there's tons of retail companies that are going to IT services firms and consulting companies looking for this type of data. And it really is kind of the Wild West in the sense of that there hasn't always been a lot of quality data at a transaction level across the entire retail supply chain. So to the point of, absolutely, if it can be aggregated and anonymized, that could potentially be a huge opportunity for Carbon6, right? I don't think they haven't done that in the past. But again, right, privacy regulations, all that stuff is something to keep in mind. But absolutely, we're entering this world where there's all this data that's out there, and it can give you great insights. And the consulting companies are always looking for that to be able to sell to their in-retail clients about, okay, here's the business outcomes you can expect, right? Exactly. Expect 12% returns on this items. If you can give those types of business outcomes using actual data, super powerful. So big opportunity if they could actually figure out a way to do it.
Okay, amazing, guys. Any other comments? If not, I can move to the next one. Okay. So this is the CAS information systems, and this is a very interesting play as well. Again, this would fall more into the payment, the supply chain, the freight, reconciliation space. So here, CAS, I guess their business model is, they have almost like a commercial bank here, and then they are sort of getting into this freight transaction space. So, which is a very interesting acquisition as well. So I know, Han, I think you had some background here, right? So do you want to provide that?
Yeah, so CAS Information Systems is a kind of a wacky company. I really love looking at them. Not that they're bad, but that their core business that's been around for over 100 years. They are a commercial bank, so like Silicon Valley Bank or Chase or Bank of America, but smaller, focused on actually having billions of dollars in commercial assets. So one of the side businesses they got into over time is paying off invoices. So freight invoices, utility invoices, telecom invoices, and they do this thing where they keep escrow accounts and they invest the float as a bank, and they're able to basically provide these services based on that float that they have. So it's kind of a indirect business model, but it works. They're publicly traded. They're successful. They have their $90 billion annually in invoices paid off across all of these different areas: freight, transportation, utilities, and telecom, and cloud. And so that's their core business model. And them getting deeper into freight and supply chain, I think, is a good move for them. But it's just one piece of their operational invoicing processing capabilities.
If you guys don't have any other comments, I have a follow-up question for Han. So when you suggest this business model, is it going to be more like factoring business, or is it going to be different?
Yeah, so the business itself is also changing in that for a long time, this company had hundreds of people, just an army of shared services to process the invoices. But obviously, this is 2025. We have AI, we have automated workflows, and they are both trying to figure out how to automate a lot of this work, as well as to figure out how they can do value add stuff, probably Chad's world in terms of that. And I would say they haven't done much of that value add as of yet. So a lot of the potential of what can be done here is all greenfield for them, but because their core business is all about transactions, float, following the money, shared services, it's a real question whether they can make that jump. Obviously, they know it's what they have to do, but as for how often this actually happens, some of you would know better than I how that legacy jump tends to actually happen in practice.
Yeah. Go ahead.
Well, I had another question for Ewan, actually, as you know the company quite well. It strikes me that this business in the long term, to a certain extent, depends on the stability of the market. And one thing which is not stable these days is global freight. Supply chain disruptions, geopolitical disruptions, tariffs, ships getting stuck in the Suez Canal, whatever, climate change. All of these things are affecting global trade quite dramatically. And yet, you need a fairly stable and reliable market in order to be able to do the kind of invoicing arbitrage that they do. Is there a risk here? Is that a risk?
I think in this case, unfortunately for us, volatility and risk is good in this case for CAS because it makes this more complicated to track. There will be more contractual issues that come up, more potential challenges that need to be looked at from an invoicing perspective. It's a great managed services challenge, and it's frankly a boring one. It's not one that anybody considers core to their business at the end of the day, looking at invoicing.
Yeah, and I mean, Hyung, I would totally, say that that's totally right. The complexity, I think, a lot of times breeds opportunity, right? So I think the more complex it is, right, the more they're going to look for those external providers to really help them with. And as we're going through these, there's one thing that's really sticking out to me, right? And this is our third story, but it seems like a big trend you can see from these stories is number one, there's a lot of verticalization going on, right? I think for a long time the technology space was focused on just horizontal, use cases that could fit a lot of places. Now that term last mile, right, it's moving into things like freight, things like accounting software, right? That very vertical view. I think another thing too is we've talked a lot about invoicing and that process. So I think are these some kind of trends that we're seeing in the market, right? That there's a lot of money being left on the table in terms of invoicing, optimizing that process because these stories that we're covering, that seems like a few things that are just kind of coming out in terms of trends in the market.
Robert, you're unmuted. You have a comment?
Yeah, just a quick one. I think to your point, Chad, I think a lot of companies or the customers want a vertical solution to buy it because they need to understand that you understand them. And it goes to the trust portion of the relationship as well. But at the same time, you build, you buy, or you partner. So a lot of these companies, they're buying or they're partnering to have a better solution for the customers. And like I said in the previous case that we talked about is that the supply chain is an area where companies can really make it up and find a way to leverage the return on investment.
Yeah, so I'll add some more. So Chet, to your point, I mean, obviously the verticalization, you are going to find a lot more in the application software space. I would say a little bit of ERP, supply chain. When you get deep into that, that's where you are going to find this a lot. But one of the trends that nobody has touched so far that is also very common in this space, especially when you look at this more from the investor perspective, they all are pushing startups to find some sort of payment business model. And the way payment business model works is, for example, let's say if you look at Shopify, the reason why Shopify is so successful is because of their payment business model, not necessarily that they are some sort of e-commerce software that anybody can, if you talk about just creating the website that anybody can do, but payment is where the play is, and everybody's sort of moving to grab that piece of pie. If you look at traditionally, and I don't know, whether you have ever tracked categories such as POS, which was one of the most boring category, or payroll, probably one of the most boring category that nobody wanted to get into those. But now payment has become the real play. And the reason why it has become real play is because you are going to get a lot more recurring revenue. You can get a cut on the transaction. Now in the commerce space, at least, they all are trying to get as much cut as possible. From the customer's perspective, obviously that is painful because everybody's sort of trying to get your revenue. But that's also a trend. And this acquisition, maybe because of that, that could be a play. So that's going to be my take. Any follow-ups? No? Okay. I'll move to the next one if you guys don't have any other comments. So I'm pretty sure this one is probably going to get a lot of comments because as everybody knows, social media is hard, right? Everybody can probably talk about that, but this is a very specific case. In this, we are talking about creator economy, whatever we are trying to do, I guess, as part of this show. But managing the workflow for creators, it's almost like creating an ERP for creators. There are going to be many different CRM systems. They are going to support some of these processes. But when it comes to managing the workflow of creators, there isn't a lot, I guess, that can help. There are going to be smaller platforms for the most part. This market is probably going to be fragmented. So that's why, this acquisition is super hot, but they have paid $250 million for which is a lot. But this category is hot primarily because of the kind of name brand that they are able to bring in. So is anybody going to have any follow-ups there?
Well, I would just say number one.
Gosh, just the numbers at first glance look a little odd to me. So I don't know. Yeah, looking at $16 million in commissions over 85,000 influencers. The basic math there, that's not a lot of money going to each influencer. Maybe a couple $1,000 per influencer. So it doesn't sound like this is either, the vast majority of influencers are not making money from this, or this is a part-time gig for a bunch of people, or, only the 1%ers are actually making money off of this platform. So I don't know whether that's a problem or not, but it does, the numbers look a little odd to me. And I would guess that a lot of this revenue is just flow-through revenue going directly to the users. So I'm wondering what kind of a multiple 250 million is on the actual profits of this company. It seems like a lot to pay.
Go ahead, Donald. I think you had a comment.
I think somebody else actually had to.
Yeah, I was going to comment. I think I agree, right? Seems like a lot of money. I would be wondering if they signed that deal before TikTok potentially is getting banned, right? Because, that obviously is a huge impact, and I would imagine how they're making a lot of their money, right? So in this, right, a lot of volatility, I would expect, right, already it might be overpaid, right, if the TikTok channel could potentially be impacted. But I thought one thing that was really interesting is they were talking about how it's essentially they can track how the influencers, right, are influencing that final number as it gets, sold to whatever brand that they're recommending. And I think that's the real power, right? Because you see so many influencers out there who are doing campaigns on Instagram or TikTok or whatever it may be, right? If they can really say, okay, this is how much I'm driving through to that end product, right, and I get a cut of that, that's a huge opportunity, because I think that making that linkage, right, is not always easy. And so if they've been able to do that, I think there's a huge opportunity there, right? And obviously it's a big space, so huge potential TAM. But yeah, you got to wonder with all the dynamics of it, if maybe a little bit overpaid by kind of what's going on with TikTok and stuff.
Yeah, and TikTok is not going anywhere, I guess. Elon is probably going to own that. Donald, go.
I heard Mr. Beast is going to own it now. So
yeah, exactly.
Yeah, that's what I heard. Yeah. So I would love to know how this deal was structured, because 250 million is a great deal of money. But if it is actually, 40, 50% shares, that might not be so outrageous. If this is 250 million cash, then it is outrageous. But if it is something that's actually more like a merger than an acquisition with a large amount of shares involved, I think I'd be more comfortable with it, because bringing these companies together does make a lot of sense. It just doesn't make a lot of sense as an acquisition for that amount of money. But bringing them together so that they have a more complete platform, because influencer. I think Chad's point about the flow through of money is absolutely right. It's a small amount of money, but at the same time, influencer marketing is not going to go away. It's going to be here for a long time. It's only going to increase. So I think if this is more like a merger than an acquisition, I'd be much more comfortable with it. But I would absolutely agree that it's a huge amount of money for not very much if it's a cash acquisition.
More comments, follow-ups? No? Okay, I'll move to the next story then. If you guys don't have anything else. All right. So I think this is where, Chad, I think you are going to have a lot of comments here. So this is your play. So WWT, and I think you may want to provide a little background there. Softchoice, in my mind, is a very mid-market play. They both are into that channel play, from the IT services, a lot of reselling in this particular space. So in my personal mind, I guess, even though WWT has not acquired a lot of companies before, this is a great acquisition, because in general, in this particular space, I don't think you can grow organically as easily. So in my mind, I think this is a great acquisition. But what do you say, Chad?
Yeah, no, this is super interesting, right? And so this is kind of a long-term trend, right? We see like the value-added resellers. What have they been doing? Well, they've actually been having a lot of success in selling services, because if you think about what they did, maybe 10, 15 years ago, they were mostly just selling a lot of hardware, a lot of software, maybe a little bit of services on top of that. But most of their clients are kind of more on the small to medium-sized business. And those are the types of enterprises that really need a lot of help into integrating all that technology. And so as the technology landscape has increased in complexity, a lot of those VARs are really in a great place to start increasing the amount of services that they're selling to their clients, even things around cloud, right? It can be across the whole landscape of the services market. And I thought for SoftServe, right, they're following that trajectory as well, right? If you look at their growth rates, revenue has actually been decreasing over the past couple quarters. But if you look at the services number, right, services number has been growing 10, 15 basis points over their software and cloud and their hardware number, right? So I think it totally goes on to point with these VARs moving to more of that services and really trying to be, a systems integrator for more of those mid-sized companies who just need help with that complexity, right? They've got all this technology, they don't know what to do with it, and they're the perfect place to come in. So WWT, they're looking at acquisition, right, as they can find synergies with more of those small to medium-sized businesses and just to increase their landscape to be able to do that. So I thought it was a great acquisition for them. And ultimately, I just assign, right, that the VARs are moving more into services, and that's a space that they see a lot of growth.
If you guys don't have any other comments, I'm going to have 2 points there to add. Number one, they have claimed this to be more of the AI acquisition. Yep. In my mind, that is just crazy. So I don't know whether you guys agree with this or not, because again, this is a very service-to-service acquisition. So I don't know where AI is there in this particular play. And the second thing is price tag. For this space, $1.25 billion, even though I would probably pay that money as well, for the kind of customer base that Softchoice is able to bring. So I think there is value here. But overall, I guess my concern is going to be around AI, the way they are positioning this acquisition.
It does seem very strange, doesn't it? If you were thinking of an AI acquisition, Softchoice would not be, bubbling to the top of that that list, would it? But and at the same time, it's financially it's a big acquisition. They haven't done an acquisition in 10 years? I mean, it's a long time since WWT did an acquisition. Just the mechanics of integrating these two companies, I wonder if they can pull that off. Which makes me wonder then if, in fact, they're going to run somewhat independently. They still want to be some technology transfer between them rather than actually integration. I don't know. It does seem like a very strange story to me.
At the same time, though, I do think that one of the big trends over the past decade is that mid-sized companies have increasingly just become companies with enterprise tech problems but mid-sized budget. So the tech problems keep getting more and more complicated, but the staffing just simply isn't there. If you're a 1,000-person company, you can't just hire 500 people into IT to solve all of your data problems. Going back in time, just managing your Hadoop clusters would have taken a small army. Then as that shifted to cloud, as that shifted to analytics, now we're calling it AI. I suppose that if you think about data analytics, workflow, automation, and AI all as this big umbrella that we're just going to call AI because nothing means anything anymore. This could definitely be an AI play from an overall tech perspective. But I do find it interesting that maybe WWT can bring some of their capabilities down market through this acquisition. Again, through kind of this shared services offering where they're saying we've already done all this homework across Gen AI, or maybe simply we have access to NVIDIA chips or AMD chips for building out your own data center or your own servers in a way that a smaller company wouldn't be able to do, and being able to take advantage of some of that scale. Because WWT has been a fantastic operator throughout the past decades. I'm pretty envious of them as a private company, having built out to the scale that they have. They have definitely been able to avoid a lot of the challenges of being a public company while frankly just growing and growing and growing.
Yeah, just a quick note. I'm from St. Louis originally, and I think that's where the company's founded. I've watched them grow over the years, and to see where they're at right now, that this is more like you all have said, is AI and cloud play versus a services play. But I think they're just trying to expand their market, and they have to, because they see it coming in from the competition, that they have to go a different direction. Otherwise, they won't be able to stay at this level they are. But just to mention one thing, I think when you guys talked a little bit about the integrating these two companies, I think that is a major issue, and I would say an enormous risk when you look to do you integrate these two companies. How long do you keep them standalone by themselves, because of the fact that integration with change management and resources is a major deal.
Yeah, absolutely right. And one thing, as everybody was talking, I wonder how different their client base is, because with this price tag, I would imagine that there's probably a lot of difference between their customers, right? So they can kind of look to those two and bring it together and say, okay, we can move a lot of synergies, right? WWT selling to Softchoice and Softchoice selling to WWT. If I had to guess, right, I would say they already did their due diligence on that. And so that's a lot of the big value. I think just one other thing from an AI perspective too, from a services perspective, the big opportunity that we're seeing around AI is to actually help people with their data. Because what we hear, right, is like these Gen AI algorithms, right? They're great. They can do all these things. But you get to most enterprise data environments and the data is siloed. It's not tagged correctly, right? And so this is what we learn in computer science when we're freshmen, right? Garbage in, garbage out. Most, especially small businesses, right? Their enterprise data is just not ready to take advantage of Gen AI. So I think that's really when they talk about the AI, it's the opportunity to go in and help them with their data to get it ready. Is that technically AI? I mean, this stuff has been around for forever, right? Just kind of traditional data, hygiene, things like that. But that's the big opportunity. And so I wonder if that's really what they're seeing, is helping people get ready to be able to use all these algorithms so they can truly start to drive value, because the enterprise data is just too poor to be able to use all these algorithms.
Right. Is your data AI ready? I mean, I think that's the question of the year. And I think most likely it's not. And I think to take advantage of what you just said goes back to the change management and your data management strategies. Then you look at some of these things. Can you look to take advantage of these innovations? And the answer is it depends upon the company.
Yeah. So just one point, I guess, there, Chad, on your point. So I don't know. I mean, do you see in this particular market, have you seen these companies doing very complex data deals? Because that is something that I would not expect. They both are ranking on CRN, and these are more of the channel resellers. They might have a little bit of service play, but when you talk about very strategic projects, data projects that you are talking about, they would go to companies like KPMG, Deloitte, McKinsey. Those are the companies that are going to do the real enterprise-centric engagement. These guys are going to probably provide some sort of technology, resell, some of the offerings. Softchoice is very commercial business model, I would say. They are in the mid-market selling Microsoft Suite, cybersecurity software. So their business model is not necessarily as strategic as some of these large consulting firms, because they would require a little bit of business expertise as well, not just the technical expertise and the selling expertise of software.
No, you're absolutely bringing up a good point, right? And this is kind of the VAR model, right, which is going more towards the small medium-sized business. Because if you're talking about Accenture, if you're JP Morgan Chase and you're wanting to rebuild your digital core, there's probably about 2 or 3 vendors that you're going to trust to be able to do that, right? Accenture, Deloitte, right? Sort of the big players. And so those are the ones who are getting those types of deals. You move more into the mid-market, well, they can't afford an Accenture, right? So they're going to look more to, and that's where VARs have kind of come in and said, we see all this complexity. We see that you're ordering all this different, software. We see your environment. Can we offer those types of solutions? I think they definitely see it as an opportunity. So I think it's more about the VARs focusing on that small to medium-sized business. But absolutely, when you're talking about Fortune 2000, large federal governments, there's really only a very select few of IT services vendors who have the, trust and the scale to be able to do those types of things.
More follow-ups there? No. So we just have 5 minutes now. So I don't think we will be able to accommodate one more story unless we want to do a quick one. So if you guys have any comments, I can probably take that right now, maybe for 1 or 2 minutes, and then we are probably going to do closing advice.
I would like to say I've been Mr. Grumpy all morning. I've been skeptical about everything. We didn't get to the HubSpot story. I love the fact that HubSpot acquired Frame AI. I think that's a good acquisition. I think that's a great move for HubSpot. I just want to end on a positive.
You were very positive, Donald, all over, okay? You are simply criticizing these stories, which is fair, right? I mean, we are all analysts.
That's a job, yeah.
That's our job.
It's a dirty job, and someone's got to do it.
Exactly. We'll take the head, right? More comments, guys?
I find it interesting that we've talked about, kind of as Ched mentioned before, a lot of these interesting long tail opportunities where there are massive transactional issues. And frankly, we talked about some big transactional issues today that I've never really thought about. that they're not top of mind to me on a day-to-day basis in my particular world of IT management and AI support. But it just tells me that we have so many silos, so many long tail activities that need to be managed in areas that that we don't even think about on a day-to-day basis. How freight billing, random tax returns, and I'm really interested in seeing kind of tracking how that ends up translating into this AI world that we are getting into, where we're still struggling with a lot of data input, data ingress and egress, and trying to figure out what to do with all this. When we survey the data world, we tend to say, call it 60% of enterprise data at best is ready for the next level of analytics or machine learning or AI. It could be even less than that. And, now we've all got to fix it. Like, how are we going to get there? All these little transactions are just little recognitions that, all these big companies don't have the little solutions that they need to actually, tie everything together.
Okay. So if you don't have any other comments, I'm going to cover some more, comments from the audience. Is your data AI ready? So she liked that question. Thank you, Lisa. Okay. We have Muhammad in the audience as well. So those are some of the, comments. And now just 2 minutes. So we'll do, any closing advice, any plug that you guys are going to have. And we'll come back to our view here. We can stop that. We'll take anti-clockwise this time. Ian, do you want to go first?
Oh, sure. I just finished talking, but it's been a pleasure to get all of your insights. It's always great to hear different perspectives on a lot of interesting things happening in the tech world.
Okay, amazing. Thank you so much, Ian. Donald?
Thank you. This is my first time in this call, and I've had a great experience, and I think it's tremendously valuable. So thank you
Of course. Thank you so much, Donald. Robert?
Yeah, just to piggyback on, is your data AI ready? I think this is the year of AI, and data together to harmonize and to utilize data to its fullest, because data is really the jewels to your company. And if you can't use that data, whether it's unstructured or structured, you're not going to be able to be more than a static architecture of your data. So I think it's important to invest in AI, invest in what's needed to maximize what you could do. But it's not a matter of maximizing for just to do it. It's so your competition doesn't pass you up, because they will, because they're going to be doing it.
Could not agree more. Great. Yeah.
Yeah. Okay. And I would just add, right, I think it's great to see these types of deals coming back to the market. I think one of the things that's been really dynamic about the whole technology market has been the rise of interest rates, right? Because if you think about, we've really existed in a low interest rate environment since maybe 2008. So the modern technology market has always existed in a low interest rate environment. So when we got the high interest rates, right, all of a sudden ROI, right, money is not cheap to borrow anymore. You got to make that ROI available. And these M&A types of deals, right, it's good to see them coming back. So I think 2025, right, we're going to see an increase. 2024 was kind of that reset. So great to go through these stories and kind of talk about it.
Awesome. Thank you so much, Chad. And that's it for this episode. If you joined for the first time, we are going to do this every single week. If you have any sort of stories that you would like us to cover and critique, sometimes we are going to be grumpy, but that's okay, I guess. That's what you get from analysts. But we all are going to have a lot of fun. So please send over, if you want us to cover anything, and if you care for our opinion, we would love to cover them. On that note, thank you everybody for tuning in. I'll see you next week.
Thank you very much.
Thank you for listening to another episode of the WBS Podcast. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. For more information on growth strategies for SMBs using ERP and digital transformation, check out our community at WBS.rocks. We'll see you next time.